Good morning and good afternoon, doctors. Thanks for joining us today. We have a very special monthly webinar for you today entitled Key Financial Decisions to Maximize Your Practice Investment. We also have a very special guest to co-present the second half of this afternoon. My name is Eric Pook. I manage the healthcare leasing team here at Cirrus Consulting Group, as well as I'm joined with Charles Loretto, a partner at Cain Watters Associates. Our seminar today is entitled focusing on part one, which is the office lease negotiation tips, as well as determining if you're overpaying in rent, some key steps to opening a practice and negotiating a risk-free lease assessment, how to identify some top $100,000 traps, as well as how to set up your lease for a smooth and profitable practice sale. Charles Loretto will be handling part two. Charles joins us as one of the partners at Cain Watters Associates. He joined them back in 2001 and plays a critical role in their continual business development. Back in 2004, he founded a CWA-related company, National Dental Placements, NDP, which is a national dental transition firm. So Charles really travels extensively throughout the year throughout the U.S. and North America, teaching dental school students all the way to established doctors on how and when to transition the practice, while also optimizing for their long-term financial goals as well. So we look forward to covering a lot of key topics, including on that side, determining how to minimize Social Security taxes, state and federal taxes, as well as to learn how practice ownership better positions you to accumulate and retain wealth. In addition, also learning the importance of having a vision when following a personal and business financial plan. So we have a action-packed afternoon and looking forward to covering some key elements. One thing as we begin, just to customize it based on our attendees here today, I wanted to do a quick poll to find out what stage in the career you are currently in. So what I've done is just put up a quick poll. If you have a quick moment, many of you are on a mobile device, should also be eligible. Are you looking to buy or build or start a current dental practice? Are you looking to prepare for an ultimate renewal of your dental office lease? Are you contemplating a potential sale in the next 5 to 10 years? Are you in a situation where you're being forced to relocate or looking to relocate the practice? Or are you owning your current practice today and looking for some sound financial and other resources to help have a lease or to help with some agreements in place to make sure that you're separated between your professional corporation as well as from your building corporation? So if you have a quick moment, for those of you that aren't on the road or chairside, do a quick update. Okay, great. Perfect. Thanks for your feedback. All right, so lots in terms of getting into renewal, as well as also looking towards long-term retirement. So we'll certainly touch on those key elements today. A little bit about Sears, for those that haven't heard of our firm before. We are very hyper-specialized. We are a healthcare and dental specialized tenant representation firm. That is our key focus. That's what we do to help dentists, physicians, and veterinarians, but primarily dentists, in the negotiation of their dental office leases. We were uniquely founded by dentists for dentists almost 25 years ago, back in 1994. And also, we have now successfully negotiated over 10,000 office leases. Therefore, an exceptional experience. I would hesitant to say we've seen it all. However, we usually get the phone calls when things go wrong, and therefore we have a vast experience in terms of helping to make sure that your dental and medical office lease is set up properly. What makes Cirrus unique is our structure. So we have our consulting team, which I manage, which are historically those that come from a financial or business management or business consulting background. In addition, we have our leasing team comprised of 4 former commercial real estate brokers, as well as an in-house legal team specifically experienced in commercial real estate, as well as dental-specific real estate for dentists. Annually, we represent about 1,000 doctors throughout North America, as well as these continuing education courses are a key component of our strategy to continually help educate the market and cover a lot of the topics today that are not covered in dental school, unfortunately, which it goes around becoming an entrepreneur as well as running the business side of dentistry, all the way down to the negotiation tips and how to properly help ensure that your interests are protected and that the foundation of your practice is solid. Of course, we're speaking at and involved with many of the different major dental associations and major dental conventions, the Hinman, California, Yankee, etc., and obviously working with doctors throughout North America. First up, for those to give a quick cross-section throughout the country, I was in New Mexico as well as Colorado and Wisconsin last week. Some key elements here are looking at the market trends. So the market throughout the U.S., as you can see here in Boston as our first example, is showing a fairly typical situation as to what we're seeing throughout the country. So if we're looking at the orange line, vacancy rates, in comparison to the green line, rental rates, we're seeing obviously back in 2013, we were just recovering from a major recession, and since then, really, the vacancy rates have continued to decline down to about 6.5% in Boston, and as you've seen in the past year and a half, there's been a large surge in rental prices as vacancy rates continually stay on the low side. For those of you joining us in Chicago and the Midwest, right, there's an interesting X cross-section that literally shows as vacancy rates have gone from about 16% down to 11%, rental rates have also gone up from about $16 per square foot all the way to $19 per square foot. So the messaging throughout many of these markets, for those of you that are involved with a lease today, based on these trend lines, it certainly makes sense that the earlier you're able to lock in long-term favorable rates beyond the initial 5-year or 10-year term, but also into renewal terms can be able to help benefit you rather than getting a large surprise when you come up to your eventual renewal and they, quote, reset to fair market rent, which depends on how it's provisioned within your lease today. For those of you joining us from the Florida market or watching online afterwards, what we're seeing here is a little more constant. As you can see, vacancy rates have stayed to 12%, shot up to about 18% in 2015 in this particular location, and then have sort of leveled out, as well as rental rates fluctuated anywhere from about $21 to $26 per square foot. The Silicon Valley, San Francisco area is certainly remaining incredibly hot. We recently published a great letter of thanks and testimonial video from one of our clients, Dr. Sam Thatcher, who is the doctor for the San Francisco Giants, and he shared his story about his renewal process where he had missed his option to renew and was certainly very concerned to how much his rent was going to increase, as well as how to help protect himself. If you haven't seen that video yet, I would encourage you to look at our YouTube page, and we'll include some information with that at the end. As you can see, again, from 2013 has driven dramatically up now into about almost $3 per square foot per month, and as well vacancy rates are now to almost 1%. So we know many doctors in that area. It's certainly a large challenge for buying or building locations out there as the market continues to be hot. So that's a quick cross-section in terms of fair and reasonable market rates and some techniques for it. So ultimately the purpose today is determining if you're overpaying in rent, identifying some key steps to help make sure that you're negotiating a risk-free lease agreement, as well as to help identify some of those key traps and ultimately set up your practice for a smooth and profitable practice sale. Some interesting stats based on continual feedback that we run into across the country. What we find right now is about over 75% of dentists have an office lease that can prevent them from selling or transferring their practice, meaning within the assignment and subletting section, the way that it's defined can specifically help or hinder that process and define how much control the landlord has in that eventual transition. Also, Many dentists are required to sign their lease with either in their personal name or requiring them to sign it as a personal guarantor, meaning that it gives the landlord the sole and unfettered discretion and right to be able to go after you in the event of any dispute with the landlord first prior to going after your professional corporation, and can also request your own personal financial or banking records at any time. In addition to that, don't underestimate the value you offer to your landlord. Dentists are highly desirable commercial tenants, obviously very low default rates. Some of our financial partners anywhere from 1 or even 0.5% in terms of default rates. Significant investment in the leaseholds, anywhere from $150 to $250 per square foot we're seeing. You're bringing in high quality foot traffic to the center, as well as helping to build value, as most in practice are typically about 30 years and very unlikely to move because of the cost of relocating and building at a new location. So therefore, the likelihood of you to relocate is very low, and many of the doctors we deal with have been in that location for many, many years. If I was to ask you, what is a lease? We ask this nationwide at all our different seminars. If I was to ask each of you, what is a lease? And there's sections to provide some feedback here. What would you say? What is a lease? Many we hear it is an agreement. Right? It is a contractual binding agreement to ourselves personally. It defines our rules and regulations as to what we can do in the location. It gives us predictability and continuity, which is most important when it eventually comes to transitioning of your practice. And ultimately, though, as you can see on your screen, it ultimately represents a check. And this check represents arguably the largest single payment to a single person or vendor that you will pay throughout your professional careers. So in the first half of the first page, it defines this. Who will be paid at the beginning of each month and when and how often, who will be required to make the payment, and how much that payment will be. So by signing that individual agreement, let that be 5 years or 10 years with 2 5-year renewals or otherwise, if you take that amount at $5,000 a month and assume that we look at that over the term, and even assuming things stay relatively constant in terms of annual increases, which we know they never do, it's not uncommon to see anywhere from 1.5, 1.8, if not $2.1 million of total spend that you will spend in that location in terms of total investment. Therefore, right, we know in many cases it's not feasible to come up with a large amount of down payment to invest and acquire our own buildings. So if the leasing based on the location is your foreseeable future, you owe it to yourself, and it is your duty to properly negotiate and leverage these critical times and this huge investment that you're making to the landlord to ensure that your interests are protected and you're receiving fair and affordable financials, as well as making sure that the legal clauses are also well protected as well, and dental specific. So let's touch on that. Why? Why, doctors? Why is the lease so important? Well, some of the main components is how important your location is to your business. Imagine, if you will, you drive into your practice tomorrow morning and your key doesn't work. Right? What impact would that have to your business? Right? The location is where the clients have found you. Perhaps you're in a local strip mall or center. Perfect opportunity that is where they get into the habit of continually coming to your practice. And ultimately, the location becomes your business, and your business is your location. In addition to that, the investment or cost. Congratulations. If you have not heard it before, dentists represent the highest amount of initial investment required for any other commercial tenant. Meaning, as you're looking at additional space versus the tenants to the left and right of you, you are by far investing the most due to medical grade electrical, plumbing, build-outs, right, the rooms, all the specific requirements for HVACs and everything you have for the specific permits, right? Incredible cost and initial investment. In addition, let's say, as we had a client the other day reach out because she received notice that she is being relocated from Suite A to Suite D in her mall, and therefore she is going through the process of having to relocate. This is becoming an absolute major challenge because not only of the physical move, but the most largest element is because with only 60 days notice, right, now there is a large component of anywhere from 6 to 8 to 12 months where new permits and new designs and new layouts are being put through, right, where there's a significant amount of patient attrition. Therefore, it becomes very important to understand the cost of relocating. And last but not least, very clearly defines being and how the practice sale occurs, right? And one of the key components within the lease defines how the sale can occur, and one of the components of sale of your practice is the successful transfer of the dental office lease, meaning the landlord can define, based on your lease, to define what happens, who can it be assigned to, as well as your potential continual liability. So if we were to look at this a little differently, perhaps from a positive aspect, what should the lease do for you? Right? If you were to wave the magic wand, what would you want it to do for you? Right? Would you even want a lease? Well, of course. Right? You want to make sure that all the work you're doing and all the investment you're doing into your space is ensuring that you have the predictability and continuity for continual patient care, continual clinical care, right, to care for your patients and continue to maximize production and beyond. We also want to enhance that ability to eventually sell your practice. Also, you want to make sure that the lease you're signing does provide you with fair and affordable financial terms. If you had received a large amount of tenant improvement allowance or investment from the landlord to build out the leaseholds in your location, and you're now coming into your 5-year renewal or 10-year renewal or beyond, be very cautious with that, right? That is not free money. If the landlord is giving you $50,000 or $100,000 as you build out your space, that money is usually calculated into your base rent, and therefore you're paying $1, $2, $3 per square foot more as a result of this initial investment, which to the landlord, they in essence become your bank. And as that continually increases and your rental rates increase year over year, and if in your lease it also describes that your annual lease increases every single year and upon every single renewal without it ever going down, you are on the never never plan, and that can become very difficult if you're not to address it and use the renewal as a perfect opportunity to renegotiate your rent to ensure it's aligned with the marketplace. And we have those tools that can certainly help. In addition, long-term stability and security, minimizing your risk and exposure, also maximizing your flexibility, right? Many clauses such as the death and disability clause, for those taking notes today, very, very important that you have protections within your lease that heaven forbid something happens to you, right? As it stands, that your lease and the obligations of that lease for the remaining term will pass to your estate or heirs. And that we've had a number of very, very, very disappointing and sad examples of clients who have either passed away and their family is reaching out, or they've suffered a dental-specific ailment that prevents them continuing to practice, and therefore their lease obligation continues for that remainder of that term, regardless of the doctor's ability to practice. So death and disability and a properly structured component there are key. As we look to the sale of the practice, there are 3 key components of the practice that in essence are sellable. You have the equipment, right, which includes when you purchased it, what the current depreciated value is of the equipment that's in your practice today when you look to sell. In addition, the goodwill. your patients, your patient charts. How much work is in those patient charts? When was the last time it was purged? And ultimately, what's the likelihood that those patients will continue to remain as a consistent revenue stream for the new incoming doctor? And what can impact 100% of your practice value? Well, if you talk to some of the practice transition teams or any of the practice brokers, they will describe the lease as one of the key elements that can either make or break a sale of the practice. So therefore, it can impact 100% of the practice sale proceeds. So what is in your lease? Well, we've got a quick example here that I wanted to review with you. So take a quick moment to review this one clause. We find this in approximately 75% of dental office leases we're reviewing today. This is the assignment and subletting clause. Please take a quick moment, for those of you that aren't mobile and on the road, to have a read through and identify any key potential issues that this would have to you if this was your lease. You didn't have to look too far. If you noticed, were a few things. Number one is it shall first have received the consent of the landlord, meaning that if you planned on selling your practice or selling it to an associate, nothing can occur without written consent from the landlord. Therefore, it's really not to your ultimate control. It is to the landlord to who and how you will transfer that practice. Section 2, the landlord shall have the option to, so just by requesting and sending, hey, I want to sell this to my associate, Dr. Smith, the landlord has three options. Number one, the landlord shall have the option to, 1, approve the tenant's request to assign the lease or sublet the premises, 2, decline the tenant's request to assign the lease or sublet the premises, or number 3, terminate the lease agreement upon the effective date of such proposed lease, assignment, or sublet. And also, depending on how your lease is provisioned, that could also assume an associate, or if you're bringing in a specialist to your practice today, that could be deemed you're subletting that space. But look at this, option number 3. Just for asking, the landlord has the ability to terminate your lease, regardless of if you have 10 years left, 5 years left, 3 option renewal terms or not, right? Based on this, the landlord has complete control to terminate your lease and potentially remarket it as a fully built-out dental space and put it out to the open market. In addition, landlord shall have the right to revise the minimum rent to be paid during the remainder of the term to the greater of the then current market rent of the lease premises, or 15% greater than the current rent, whichever is more, meaning that you are on the never plan, meaning that upon each renewal, you are either going up that 15% or going up the current market rent if that is higher. That is a huge increase, and if that's not aligned with the market, or if the market has declined, then certainly you are looking to be paying that much more outside of normal and fair rent. Right? Again, these are very aggressive terms, but we find these in 75% of your leases. For those of you that are scrambling to find your lease agreements, definitely have those handy. Please review them. You should find very, very similar language in most commercial real estate leases today. Also, should tenant receive from assignee or subtenant any rental income, cash goods, or any form of consideration, that's the key word to look for, consideration, in connection with the assignment of this lease or sublet of the premises, meaning practice sale, that is over and above the current base rental rates payable to the landlord in any fiscal year, the difference between those two numbers, I'm paraphrasing here, right, for cash goods or other consideration shall be paid to the landlord directly within 30 days of tenant's receipt thereof. So in essence, doctors, this essentially means that the landlord deems that your value from the sale of your practice beyond the base rent, so if you owe $100,000 in rent, any dollar above $100,000 based on what is agreed to here means that that is owed to the landlord. The landlord can argue that their location is the value of the business, not the blood, sweat, and tears that you have done over the past 5, 10, 15, 20 years, and therefore they reserve the right to execute and exercise this provision and require a payment, as we had an email the other day from a client who had not leveraged their services and was being forced to pay $120,000 just for the landlord's right to transfer the lease. Absolutely unbelievable. And therefore now he's got his personal attorney involved. In essence, the landlord has simply dug in their heels and says, here's the agreement and here's what was agreed upon. Last but not least, notwithstanding the landlord's consent to any assignment or assignment and subletting, the tenant shall not be released from its obligations under this lease and shall remain liable for any failure of the tenant or its assignees to observe each and every covenant of the lease. Therefore, this means that even after you have sold the practice, you've retired, you are still continually liable for that new doctor in your space or whoever you have assigned that lease to. So be very careful with this one provision to ensure that you're protected and beyond. So as you can see here, this is not dental-specific language. This is written for the nail salon or Subway sandwich shop, down the road. This is not designed for a dental practice. Therefore, if one takeaway from today, doctors, is make sure you have dental-specific language and reach out to a dental-specific negotiation expert, as well as make sure that your interests are protected to ensure you don't fall into travels and challenges as others have. Just as we finish up here and transfer, most commercial tenants, dentists included, have agreed to provide the landlord with that unconditional personal guarantee. This can have a huge detriment to your practice investment, can also impact you personally upon the eventual sale if you are continually liable. So be cautious with this. This is fully negotiable. You have the ability to reduce it. There's a lot of strategies that can be done, or ideally remove it completely if you've consistently paid your rent on time. Personal guarantee, in the essence of time, we won't go through this, but as you can imagine, a number of individual sections that therefore gives the landlord complete control and that you are the guarantor and can be personally and unconditionally bound, meaning your assets, 401k, investments, any of your personal assets, cars, boats, etc., can be deemed if they are your personal property and you've given a personal guarantee. We mentioned before the death and disability protection, very important to ensure that what happens if something happens to you, heaven forbid, or your ability to practice chairside or wet finger dentistry. You want to ensure that you have as much protection and as many exits to the lease as possible to protect you and the executors of your estate, to help mitigate the challenge in those worst case scenarios. It's important that you have the protections built in the lease, and is certainly the equivalent, as our CEO has mentioned many times, of having a life insurance policy that doesn't cost you a penny. To have a specific death and disability charge or death and disability provision within your lease that gives you the right to terminate that lease liability early, as well as make sure that you are not continually bound to that even after your passing. These are just some other high examples of many of the provisions that we will review within your lease to ensure that you're well protected. And those are all negotiables. One other key takeaway here is within the tenant lease cycle. This is the type of information that landlords go to their own seminars to learn how to maximize the value of their buildings. And they are taught this, that if, the ideal time for you to maximize your leverage is 24 months prior to expiry. right? Not only your option to renewal, that could potentially be 12 months out, meaning if you don't submit written notification, you may miss that option, right? But landlords will typically delay, stall, and get to the point where those option renewal notice has expired, meaning that your ability to exercise your options have become null and void, and they will usually wait till about 3 months out or 2 months out or 1 month out to say, whoops, your lease is about to expire, here's your new terms, sign it, or you will go to month, and then have only 30 days to remain in that space if they chose to exercise. The secret sauce, for those of you that have attended some of our courses or seminars in the past, right, some key elements to what we do first and foremost is to gather all the information from our clients, right, to evaluate what the current status is of your current lease or any of the original renewals. That might go back to your lease back to the early 90s or earlier. We then want to have a call with you to identify the business side, your practice and career goals, where you've been, where you are, and where you're going. Also to dig into the specifics of your lease. So we'll go through similar examples to what we've discussed today to ensure that your lease you're at least aware of what is hiding within your lease and break it down in terms of plain English. We'll also cover some of the market research to show what other tenants in the area are paying, as well as some comparisons as to what fair market rent will be or is. Developing that treatment plan of a real estate negotiation strategy, and then if you choose to retain our services, we then negotiate our time specifically on the financials first. Once we get the best rents, the best common area maintenance, the best annual increases, we then transition to focus on arguably the most important, which are those lease negotiation terms. And finally, get to a final review and execution of the lease. Here's some key takeaways, right? Be strategic, start early, don't wait until the last minute. The more time you have, the more leverage, right? And remember, everything is negotiable. So, you owe it to yourself, your practice, your staff, and beyond to make sure that your lease is giving you a solid foundation and maximizing your benefit and minimizing your risks. For those concerns about their specific risks, we have a specific offering for all those on the webinar today of a complimentary CDRA, or Critical Dates and Risk Assessment. Based on time, this has a value of $1,495. We spend a number of hours analyzing your lease for traps. We also then schedule a call with you and or office manager to discuss that office plan, any traps, right? Also to understand what is ideal for the long-term strategy or transition for the practice, and give some good practical guidance, tips, and tricks on how to effectively execute on a tactical plan. On that note, I appreciate everyone's time today. This concludes part 1 of our seminar. So for those of you that are interested or looking for some more information to help understand their dental office lease that's been gathering dust in their office, feel free to reach out to myself or to any of our colleagues here at Cirrus Consulting Group to arrange the complimentary lease review. Many of our clients say that it's absolutely the best 1 hour they've spent in months to help understand their practice as well as the long-term strategy. On that note, it is my privilege and honor to pass the baton to our special guest today. Charles Loretto, as introduced prior, partner of Cain Watters Associates, has some great information today to, again, really help to make sure that we're minimizing some of those Social Security taxes, making sure that we are able to learning how the practice ownership better accumulate and retain that wealth upon your eventual transition, as well as ensuring that you've got a key vision aligned with both personal and business financial plans. So on that note, Charles, I'll pass it over to you.
Hey, Eric, that was great. I know we've just met a couple of times via phone, but you did an excellent job. You're a great speaker, kept me well entertained as well as educated. So I really appreciate that.
Thanks, Charles.
I think for the audience too, it's always important to know there's no financial dollars going back and forth between our companies. It's simply we've been in the business for 30 plus years, giving advice to dentists. We have over 2,000 dental clients nationwide, and certainly value the need for a dental specialist, in this case a dental lease negotiator, to come in and to look at the key details that you've pointed out in your lecture, certainly some of the same clauses that we have seen, and see the value of somebody like you that can come in and negotiate those terms for us. So also appreciate the invitation to participate on this, so thank you. We have 22 minutes remaining. I give this lecture and I have 180 minutes, typically on a 3-hour lecture. I'm spoken at state, national meetings, and I never finish early. So if this is a little fast-paced, I apologize. I do my best, obviously, to hit these points, and then certainly have the opportunity to visit with any of the attendees for some one-off questions. They want a 5-minute or just go back and forth with some emails, we'll definitely hit. I certainly want to let you know what we're going to talk about. I think there's some 6 critical steps that you got to think about from the time you graduate. I think that I want to show you a case study of a dentist who owns a practice. I want to talk about tax planning, pension planning. I want to talk about just the importance of having a financial plan. When you're investing in a practice, there are assets that you have a choice to appreciate. There's investing, maybe in a later part of your career on a building. When you invest in a building, there's strategies on how to front some of the building purchases and appreciate those assets up front. So super excited. So let's just jump all the way in this thing. There's a couple of pictures of the Loretto kids, a soon-to-be senior and soon-to-be junior. Importance of having a financial plan. I want you to feel uncomfortable here as you give yourself a rating. A financial plan, to me, is this, very simple. Charles, I know the break-even of my business. I know if I produce $62,000, that pays for my practice bills. Also, if I factor in that if I do another $15,000 a month, that pays for all my personal lifestyle. If I do another $10,000 a month, that covers all my federal, state, and tax liability. If I do another $10,000 a month, I factor all these numbers in, Charles, my break-even to run my dental practice based on my direct and fixed costs. If I do $83,000 in clinical dentistry based on my collections of 97%, that will absolutely pay for all my office expenses and my team. That will absolutely pay for me and my spouse, and 529 plans for kids, and the mortgage, and the cars, and all the other crap. And it will pay for all my federal and state taxes, and also will pay for and put the money away necessary for my retirement plan, because I'm 42 years old. I got $500,000 stuck in the bank, and then I have retirement goals. I've been meeting with my financial advisor, and I've got retirement goals set. 62 years old, need about this amount of assets, $4.5 million, Charles. I need to put it in the tax-deferred environment. I keep putting this money away at a 6, 7, 8% growth rate. I'm going to hit these. So if you have a just detailed plan of attack on your personal financial plan and can walk me through those steps, like, I've got this under control, kind of give yourself a high five. You give yourself a 10 in tax planning. My CPA is very proactive. Understands the business of dentistry, understands certain tax deductions, even in my specialty. Is really looking, kind of forward, and hey, I'm going to receive a sell of the business in this. I want to set these types of maybe cash balance or, other types of retirement plans up where I can put a lot of money away. Understands that, my spouse is on the payroll, my children are on the payroll. I can run things through my business. My CPA understands, looking at me when I need to start a business from scratch, and understands the demographics necessary around me. Understands that my business is at $1.2 million, $1.3 million, $1.4 million of dental collections, and my doctor productions at this number. He or she understands that I got to bring an associate in because my business is flat, and all my fixed costs are fixed, and I have a very small amount of direct costs that would only increase if I bring an associate. He or she understands as a CPA and can see by bringing an associate, if I increase my collections by $200,000 or $300,000 and I pay the associate this amount, this is the amount of profit I would be able to receive out of and be profitable off that associate. They see how bringing in a partner, pulling the equity out of the business will be profitable for me. So again, understanding depreciation of assets. You have a dental CPA, dental CFO that's really looking over the financial decisions that you are making. And I say all these with self-serving interest because it's what we do as a firm. So if at the same token, if you don't feel like you have that person already on your team, then that would be a challenge back to you and your own advisors to go out and start surrounding yourself with that very focused team. One of the things that Eric talked about, kind of hit on several different ways, is making sure you have dental-specific experts that are working for you. I cannot stress enough, the old guy that's been doing this, me, the gray-haired guy that's talking to you from Dallas, Texas, and I can give you one set of advice, is to make sure you surround yourself with somebody like this. Hey, I've done 10,000 lease negotiations. That's what I would call a true expert, somebody that's just focused on that one business. I like that for the dental website guy, the dental consulting guy or gal that maybe specializes in just the hygiene. Maybe it's the architect, maybe whatever, pick out 50 vendors, the dental lender, whatever it is. I like the dental with long track records. Again, self-serving, we have that long track record as well, a little over 30 years in the business. 6 critical steps I would tell a young dentist coming out of school: get some experience, save some cash. You're going to buy a business. I want them to buy a business the first 2 years in practice. After they get this practice purchased, then I like to invest in consulting to grow the practice. And once they start making a significant amount of money, their number one issues are taxes, which I'll show you a slide on taxes. The way you combat taxes is by owning a business. When you own the business, you can set up really aggressive pension plans where you can put lots of money away, which prepares for retirement. So pension planning and tax planning are two best friends. They go hand in hand with each other, and you get to take complete advantage of those two when you own a business. Lastly, step 6 is I would tell any person you eventually pay yourself. Paying yourself is when you're actually going to deal with dental school debt. Most young people want to pay dental school debt off at step 1 or step 2, which makes a lot of sense to them emotionally, but from a financial standpoint, owning a business will allow them to make twice as much money, typically twice as much money as an owner for doing the exact same dentistry. So one of the messages that we teach all around the country, myself and one of my colleagues, we go to these dental schools and educate these young people on why you must own a business. So as a CPA firm that has given advice to these thousands of dental clients all across the country, what do we see? What are some of the key successes we see? We love beautiful marketing that's going to drive the patients to ultimately engage. That could be the engagement through social media. That engagement now is on their website, which is now saying they want to come in. The website is a very important component. It needs to be the top-notch, beautiful picture of you, your team, excellent phone skills, so when that phone does ring, that you're able to, you have a team of people able to close that lead that's coming in. Corporate has done a really good job of entering this business of dentistry, and when you go to these massive kind of DSO conferences, it's their claim they have about 25% market share, which when you start running the math on number of dentists, you start interviewing people like the Shines and the Pattersons of the world and asking them, that number seems to be about correct, somewhere in that 20% range. Well, one thing, they've done a fantastic job on is marketing, a fantastic job of getting 100 new patients a month showing up at these offices. They've done a great job with all of their demographics for location, hiring the people and getting the patients in the door. I'm a big proponent of service, just taking care of people, having the zero tolerance for right and wrong. Best person that's doing the case presentation doesn't necessarily mean it's the doctor. It's whoever's the best at presenting and building a relationship with the patient. Have those clear financial goals set up for the office. Again, goes back to you, doctor, where if you understand you need $83,000 a month to make your business work, that's giving yourself and your team good bonuses and good compensation and good packages as far as a financial package, and it meets all your tax planning needs and all your pension planning needs, then your break even for your office is $83,000, not maybe $50,000 just to pay for the staff and the overhead. I like when you know that number with clarity, so now you can give that goal back to the actual office. And so if the office knows what the goals are, they can hit these goals, and they know that they're more profitable if they're doing 85,000 or 90,000, whatever the number might be. It doesn't have to be a 80, it could be a 50 number. The point is when your team understands what the goals are and the why, then now as you do more, you're more successful, you can share with them. So to me, it's really important to be able to share those goals with your entire team. I'm a big proponent of having a financial plan in place. I would show a young person here that's 30 that has $0 saved. They're going to need about $8.5 million prepared for retirement. Now, this number blows away so many people, and I'm asking a young person to save about $70,000 a year for retirement. You don't save $70,000 a year as an associate. You don't save $70,000 a year when your practice collects $500,000 and nets $150,000. You're saving about $70,000 a year in your retirement plan when your net income and tax liability is typically over around $300,000. Why $300,000? Because that starts getting into some of the highest tax brackets, which I'll show. The point of this slide and the point of the next two slides is, depending if your ages are 30, depending if your ages are 40, or depending if your ages are 55, each of these three people have different timelines. Each of these three people, in this case the 40-year-old, has about $300,000 saved. They're choosing to save work till 65, and they have a lifestyle that's going to be about $14,000, $15,000 a month between the ages of 65 and 90. So these financial plans should have built-in inflation. They should have target rates of return in this example of 8%. They should have identified number of years that they're saving, and obviously look to see what type of liquidity or tax-deferred savings already, and make those calculations run out. Quick case study is $1.2 million practice. This is something that myself or my team would do. Is for any of those who are listening, like, I don't know if this company makes sense, or what would we offer? Kind of our call to action would be, just reach out, just send us something and let us look at it. I'll spend a couple of hours looking at your situation. If we can help you, we'd be happy to help you. This is an example of how I would help somebody. Somebody would kind of call in, they would download what their situation is. They would see that it's $1.2 million collection practice. They're telling me this. They got an S corp. Hey, I pay myself this $140,000 salary. I would see they've got an overhead of 55%, and they make a $540,000. This person makes a lot of money. Got spousal payroll that's at $50,000. Get a simple retirement plan. They're out in Sacramento and they're spending $7,100 a month in rent for 2,100 square feet. Quickly, as I diagnose this, I see $1.2 million practice. I see a doctor that can't probably do any more in dentistry. It tells me they're flat. It tells me their $140,000 salary tells me they're not maximizing their pension plan. The $540,000 they're making tells me they're absolutely getting crushed in taxes. 40 new patients a month says they're not spending quality time with their new patients. $7,100 in rent and 2,100 square feet. It tells me that they're very limited on space. We need a bigger space here. We need the ability to have the 6th and 7th and 8th chair, because if we bring an associate in this practice, we need more room. The 5 chairs is just not efficient enough. Once we bring the other doctor in, we're going to immediately need the 3rd hygienist chair, potentially booked for scheduling purposes. Each clinical doctor would need 2 clinical chairs, tour guide with an emergency chair backup. So that's your 5, 6, 7, 8 would be my ideal scenario. Did an okay job on saving for retirement and a pretty good job for kids' retirement, but they are just not on the right plan. So I start making recommendations with very specific direction. Their salary is going to go from $140 to $275. Why $275? Why not $274? Why not $276? Why not pay them $130? $1. There's a very exact amount in our business as far as a CPE firm giving advice to dentists. It's not generic, it's very specific. This example, the guys should be paid, it's a he, $275,000. It's the maximum dollar amount the IRS allows us to assign as a salary when I test out a pension plan. This guy is only putting away $25,000 in his pension plan. We're going to have him put away north of $100,000. Why? Because he's 50, he's getting crushed in taxes, he's got the money, we've got to put the money away in the right environment. So I put the $275 up there because that's going to be the change. I'm going to lower the spouse salary from $50,000 to $26,530. Why exactly that number? Because this exact spouse happens to be 50, and because of the catch-up rules on the $18,500 that we can put in the 401k, plus the $6,000, there's $24,500, plus I need to maximize that number up for my Social Security taxes, so I've got to get that number exactly right. If my spouse was under 50, she was, let's just say 40, I would pay her exactly $20,003. Why is that? Because the same concept. Once you take the Social Security taxes in place, what's the reason for a spouse on the payroll? Two main reasons. Number one, you're getting a 401k deduction, in this case $18,500 for 2018. Fast forward, they have a pension plan, they work for the government over here. I may only put my spouse on the payroll for a few $1,000s so that I can justify when I come home talking to her or him that we can maybe write off some of our meals entertainment that looks like it's going to be allowed again for this year in 18, as well as maybe traveling as we go to various meetings, quote unquote the ADA Hawaii meeting this year that I need to bring my spouse on. Now all of a sudden if she's an employee, he's an employee, we can justify some of the expenses, on that trip. So there are very specific reasons in our business that we're in. Specifically telling this person 3,500 square feet because I need 8 operatories for this thing to work. We may build a building at $1.5 million, or I may figure out, hey, I'm 55 or 60 and just say, hey, let's run the break even. Do we just do a lease? So you really need to listen to what these owners are trying to do to figure out what makes the most sense for them. Help them with the associate plan. We've helped over 800 people, 800 dentists, create partnerships in the last 34 years of doing this. So these are kind of my recommendations for this particular doctor. On the left, some of my costs. Sometimes there's some cost to get a benefit. Cost might be in Social Security taxes. Cost might be setting up a pension plan, cash balance plan. Benefits may be I'm going to start deducting a lot more money in tax-deferred environment vehicles, but I'm going to get a significant tax deduction. Because remember, when you make money, in this case, I'll show you the tax brackets here in a second, your number one evil becomes your tax liability, not necessarily my 4% interest on your bank loan that you get a deduction for, the 4% on your home that you get a deduction for, the 4% on your building you get a deduction for. And your dental school, loans, it's horrible, it's really bad, I get it, but as long as you can get into ownership sooner than later, you can get that, kind of benefit of making more money. This particular case here, we'll move on. It's a $500,000 collections. The doctor's making $150,000 between he and his spouse. It's a he owner and a spouse that's working to try to help in this practice. He's working 4 days a week in this practice, and they're only benefiting $150,000 between the two offices. They completely stopped marketing. There's no need to pay a spouse $30,000 in this example. I cut her salary completely off, and it's going to save us $4,500 in Social Security taxes. I still want her to be in the business and work it. I'm probably going to have him work instead of 4 days a week down to 3 days a week. I need him to go work, someplace else 1 or 2 days a week, making about $1,000 a day, drive income up. Why? So we can invest back and grow this business. The first $500,000 of collections in this business, you just don't net very much money, $150,000. But the next $500,000, you should have a net income close to $400,000 to $420,000 because we're leveraging fixed costs and leveraging and getting more out of our individual employees. So my recommendation on this case study number 2 is not about tax planning, pension planning, prepare for retirement. It's about you need to grow the business. Recap there as far as what Social Security taxes look like. Every dollar and cent from $1 to $1.28, you're going to pay Social Security taxes at 15.3%. So the example earlier of the wife on the payroll of $30,000, we've got taxes $4,500 for paying the Social Security tax. In my personal opinion, there was just really no benefit for it. Next set of Social Security taxes kick in between $128 and $250, and then another tax, Social Security tax, goes between $250 and anything north of $250. General recommendation is when you own a business, you'll set up an S corporation to manage your salary so that we have distributions and profits. If you're running as an LLC or setting up as a C Corp, you might not be managing your Social Security taxes efficiently. So if you've got questions on that, I'd be happy to visit with you. But it's important to understand Three taxes: Social Security, state, and federal for those of you that are in states with state tax. Bank loans, refinance those. Anything that are north, probably 4.25. There's probably a good chance that you can get a dental-specific loan and get it refinanced. A life insurance is kind of like a legal contract, like a lease. When do you need life insurance? When are you going to look at a legal contract like a lease? When there's a problem. Death, disability, those are problems. Disagreement, maybe between you and the that's going to be a problem. How do you get into the deal? How do you get out of the deal? So that's very much why I like this part of this first part of the lecture, is because it's important to understand getting into the right deal at the right time. Those that are thinking about starting a practice from scratch, pedos, oral surgeons, this is a no-brainer. You're high in demand. Maybe a little no debt. You really understand the marketplace. You've got an excellent kind of demographic, understanding and study, and you can see the vision of what this thing needs and where to go. Let's just push forward here, and let's get to some of the tax brackets. Some of the tax brackets here are single person in north of 157 is getting crushed at 32% federal, plus our state tax on top of that. Obviously, the numbers for the married are below there. So again, as you own a business and you have this tax liability, north of 300,000 married, this is your number one evil, which is your federal taxes. And so we want to be able to push you to understand that is a tax liability that's important, and make sure you got a really good team around you. There are some slides there on how much you can put away in the 401k profit sharing plans. Again, what I said earlier, this is the best possible friend for you. Move through on that, and the cost savings. We talked about our 6 critical steps. Learning objectives. Let's recap what we talked today. Financial plan, that's both the business, both on the personal, with a very, very conscious mindset of what taxes look like, as well as your personal financial plan, meaning how much you're putting away for retirement. We talked about rating yourself from 1 to 10 as far as you and your advisors on tax planning. Are they proactive? Are they reactive? Do they just call you up on April 14th and tell you how much you owe in tax? Or are they proactively telling you, in 1 or 2 years in advance, or even specifically in 2018, the new tax law and how this will benefit you? Strategy on bringing a partner in, how to pull the equity out and why to pull the equity out, how to manage debt, what's a good debt, and what is a bad debt. 2 services here. Cain Watters. You own a business, you own a business and you make money and paying tax. This is really where Cain Watters is jumping in. If you're a young person and you don't own a business and you're looking for someone to guide you through how to buy a business, NDP is a transition company that helps you look at a practice that's for sale. If you're established doctor thinking about thinking someone to bring in an associate, strategies there, we can absolutely do that. So just to focus on time, I'm 1 minute late. I can't thank you enough, and I hope that the entire group here found value. For those that do have questions, feel free to reach out to our firm, either the info, but just make it simple, the info at Cain Watters for any attendee. Send a simple email that just says set up call, and we'll spend a complimentary 1 or 2 hours with you to make sure that you're doing things right. We'll be the first to point that out, and those errors that you're not taking advantage of, we'll be the first to point that out as well. We can help you, fantastic. If not, we'll make the time that we spend with you very educational and independent. So with that, I appreciate the opportunity, Eric, allowing us to participate today.
Charles, thank you. That was incredible. It feels like I just went through a financial boot camp for the practice. That was some great, I think of any of the guest speakers we've had in the past, this was some great tangible tips, great solid financial examples, and hopefully everybody currently still in the webinar has a great opportunity to get a good sense as to where there's some good practical knowledge from industry experts such as Cain Watters can really help to make sure that your practice is set up properly. For those of you that are interested in that complimentary service that Charles had offered, on your screen now you've got a quick button to be able to click on a Cain Watters consultation, as well as that complimentary lease review. As well, for those of you focused on the CE credits, you also have an opportunity to add in a yes, no, or otherwise. And also for your feedback, we're always looking to improve. If there's a better time of day that is better received for these webinars, obviously we're working with doctors throughout the country. If there's a better time, please let us know as well. Thanks for your feedback for the evenings. We've done a few evening sessions as well as evening sessions throughout, some California ones we did recently. I would also encourage you, as everyone's selecting either the lease consultation or the complimentary Cain Watters call with Charles and his team, certainly encourage you to follow our YouTube page. This gives you a great opportunity to pause any of Charles's slides, any of the details, the examples, etc. Great opportunity to see all the notes, especially as you schedule your follow-up call with them as well. Beautiful.
Awesome. Yeah.
Great. Charles, thank you so much for your time. Greatly appreciated. As well, I'll pull up a queue in any additional sections if you want to download any additional material. Our website, cirrusconsultinggroup.com. Great, again, tips and tricks for those who are interested in helping to improve the practice, helping to open, start up, renew a lease, or eventually transition. As well as Charles mentioned, anybody looking for tax strategies, minimizing tax, state and federal taxes, or if they're looking for ways on help to maximize the wealth, as well as specifically for the family. If your family dynamic has changed, perfect opportunity to reconnect with Charles to understand how best to create some new tax strategies to maximize your personal wealth. So
yeah,
greatly.
Eric, do you mind if I just say one thing there?
Absolutely.
I would say that probably 9 out of 10 new doctors, when they purchase practices, they absolutely completely fail how they depreciate their assets in the practice. The vast majority, they depreciate these assets way too quickly, and they just miss out on the future of what I can see. What's easy for me to see is what their tax liability is going to be in the next coming years. And so it is so important to get that, have a dental CPA to help you with not just the short term, but the long term of how the assets are depreciated, both in a building as well as an acquisition of a new office or just a build out of a new space. It's super important.
Very, very applicable. I ran into that at a seminar last week in Denver as well, and that was advised to have a shorter term lease based on more accelerated or too fast accelerated depreciation on the new capital assets to build at the new location. So again, another perfect example for all those on the call, right? Leverage your professional team, make sure that you've surrounded yourself with great people with dental specific knowledge, and ensure that you're getting the best of all those knowledge sets. And as you can see from today, lots of people very focused and willing to help ensure that you are not alone within your practices. We're doing our best to make sure that they include this type of information within the dental schools and entrepreneurship type training to ensure that you focus your efforts in best success chairside and leave a lot of the specific negotiations and accounting strategies to the experts. And happy to help to have those first steps. So again, thank you for those that have reached out for the additional information for the lease consultation as well as the Cain Watters call with Charles and his team. Really appreciate everybody's time today. Feel free to reach out with any additional questions. If there are, we'll keep this open for any additional Q&A. I know we're a little over time. There's also some great resources on your screen for those of you that aren't on the mobile app. Perfect opportunity to download some good guides. There's some great new practice checklists that's available, as well as some transition planning on how to help structure yourself to minimize those liabilities. So we've published here some great white papers on the bottom right-hand side of your screen, as well as there's some key online resources as well to help ensure there's a lease date tracker. Please ensure you know your date when that's looking to expire, as well as some great video resources from some of our former courses with other key guests, as well as some details on Cain Watters, Cirrus Consulting Group, and how to effectively negotiate your dental office lease. So if there's not any additional questions while we're still live, we will publish this video over the coming days. Charles, I can't thank you enough for your time and exceptional information to help all of our clients hear some great opportunities to protect themselves and put in some great financial strategies.
Yeah, I appreciate it, Eric. I appreciate the time, everything you did on this. So you did a great job. I appreciate it as well.
Perfect. Thank you very much, everybody, and we will be in touch soon. Looking forward to hearing from you.